The whole semiconductor cohort is now roaring as Wall Street bets that the industry's finally bottomed. With a new PC refresh cycle on the way, a view that I really believe in. I've talked about this before, but whenever I find a new thesis, I always like to look for confirmation wherever I can find it. And that's why tonight we're going off the charts with Dan Fitzpatrick. He's that terrific technician who's the founder of Stock Market Mentor. He's host of his own podcast, The Fitz Factor. He pounded the table on NVDA in early September, saying you should hang on through the near-term turbulence. Come on, that was a great call. Now Fitzpatrick points out that we're seeing big moves in a much broader array of semiconductor stocks, and he thinks this could be a very good year for the group because big institutional money managers simply can't get enough of them. Yep, right now, he says the semiconductor stocks are under institutional accumulation. But does that mean it's the right time for you to buy? Okay, let's take a closer look, starting with the weekly chart of the VanEck Semiconductor ETF. That's called the SMH. It's what we all use, and this one goes back to 2019. Now, Fitzpatrick points out that the SMH, here represented by candlesticks, okay, has been in a long-term uptrend ever since making a big capitulation low in early 2020 during the initial COVID meltdown. Of course, there's been some medium-term turbulence along the way. Buying peaked in late 2021, SMH around 160 at the time, and the Fed started raising interest rates, and the world moved on from the pandemic. No more COVID-era home office spending boost, particularly PCs. And that's when the semiconductor ETF pulled back below its 40-week moving average, ultimately pulling back nearly 50% from the highs. This is pretty ugly, okay? Fitzpatrick notes that the reversal back then was on pretty high volume, which is how you knew the decline was the real deal. But by late 2022, though, the semis bottomed along with the rest of the market, and the SMH has been trading steadily higher ever since. Look at this nice run. Last July, the ETF tested the 160 level, and it failed. Okay, that was a bummer, all right? But then the floor collapsed. The SMH started falling apart again. This is when all things tech were getting killed by skyrocketing long-term interest rates. Remember, it has one component that's earnings, but another component that's interest rates. When interest rates go sky high, these get crushed. It's always been the case. However, Fitzpatrick says you could tell the pullback this summer was different from the pullback in 2022. This time, the SMH was declining on low volume. Remember, we want this volume versus volume. Okay, so this is the real deal. This is not. The slope on the pullback was shallower, and when it tested the 40-week moving average, that floor support actually held. Okay, 40-week is blue. This time held. Okay, that's because it's light volume. Leading to a fabulous rebound in the fall. The SMH broke out to new highs in November, and it's still going strong. According to Fitzpatrick, this is exactly what institutional buying looks like. As he sees it, the SMH could rally another 25% over the next year, albeit not in a straight line. Okay, so it's not going to, he's looking like that, not parabolic. I hate parabolic. Right now, the stock's running along the upper Bollinger Bands. Those bands are measures of volatility. Fitz considers this a good sign. He recommends waiting for a temporary pullback, the 10-week moving average, before you truly pull the trigger. And now we're speaking 10-week. That means he'd like to see, again, remember, these are candlesticks. He wants it to come back down a little bit like that. I know too small to see, but trust me, it's still a decline. Don't do anything. Don't pull the trigger until you get that. Nothing wrong with putting on a small position, but I'd rather have you wait. Now, let's take a look at the weekly chart of two fairly different kinds of tech companies. NVIDIA and Super Microcomputer. One will be a week. I'll tell you, why don't we do one weekly and one daily? When Fitzpatrick looks at the action in video, he thinks that this nearly $600 stock could go to $900 purely on the basis of the chart pattern. While NVIDIA had a monster 365% gain from the bottom in 2022, that move eventually stalled at 500. And that's a big, obvious number. Did you know that Fitz says these big, obvious numbers are important to watch because people actually care about this stuff? Even if, rationally speaking, it shouldn't matter at all, right? For the better part of the year, people would see NVIDIA at $500 and figure it was time to sell every time it got there. It was just a wall. It was a ceiling. That's what we call it. It took a long time for the stock to finally break out the upside just a couple weeks ago, and within days it was to 600. Now, during the second half of last year, Fitzpatrick says NVIDIA really just drifted sideways, giving the key moving average here some time to normalize. They gradually flattened out and caught up to the share price. For Fitz, this is a great setup for what's known as a continuation move. You get a big rally, stock digests its gains for a long period of time, as he said it would, and then finally starts roaring again, which is where we are now. For NVIDIA, 500 is the new floor of support instead of the resistance. So where's the next big ceiling of resistance? Okay, the stock rallied roughly $400 from its 2022 lows until it stalled out at 500. Fitzpatrick says these moves often repeat themselves in scale, which means NVIDIA could have another $400 rally that takes it to 900. I know, it sounds simplistic, but you'd be surprised how often this technique works. Right now, it can work because money managers can't get enough of the semiconductor stocks, and the magnificent NVIDIA is the best of the semis. Fitz thinks the big money will steadily push it higher, and I bet he's right. Finally, how about Supermicro Computer, a San Jose-based maker of server equipment, including chips? Now, back on Friday, Supermicro stock surged 35%, which is what you're seeing right here, okay? 35% after the company raised guidance. Today, it jumped another 3%. Both moves on massive volume. See this? That tells you again, what does he say? It's true. The average volume for Supermicro is about 4.2 million shares. On Friday, it was over 23 million. Fitzpatrick says it's pure institutional buyer. By the way, I recommended this one in December, and since then, the stock's rallied nearly $200. Should we stick with it? Check out Supermicro's daily charger. Fitz points out that the stock spent 5 months building a flat base from August into January. Traded sideways for so long that the 50-day moving average flattened out, and the 200-day moving average started catching up. 200-day blue, 50 flattened out. There's the flat out, and then it comes up to this, okay? 50, see that? That's Fitzpatrick says it's a great setup for a stock that's been in an uptrend because it's a sign of consistent demand. Even though Supermicro seems stuck below $300, people kept buying it on pullbacks. Then, a few weeks ago, the stock broke out above $300 before briefly pulling back to its 50-day moving average. In other words, it made a higher high and then a higher low. After Friday's run, it's finally above its old ceiling of resistance. Forget $300. It's already shot through $400. Whoa. How far can this move take it? Fitzpatrick notes the Supermicro pulled back from August through October. That was a $130 decline. If we use the August high of 357 as the reference point, then add $130 onto it, Fitz thinks that Supermicro can go to 487. Wow. Which is just about where the stock traded today before selling off, coming back down to the 430s. Doesn't mean the move is over, but Fitzpatrick recommends waiting for a better entry point. I share his trepidation about pulling it right here. Here's the bottom line. The charts, as interpreted by Dan Fitzpatrick, suggests that semiconductor stocks have a lot more room to run, although some of them, like NVIDIA, seem a lot more attractive at these levels than something like Supermicro that just rocketed higher on Friday. Let's go to Dave in Illinois. Dave.
Dr. Cramer, Happy New Year, my good mad friend.
Oh, same to you. Thank you so much, Dave. What's going on? What's going on in the Illini?
Jim, I'm glad to see your recent charitable trust bullpen edition of Advanced Micro Devices after selling the stock late last year. Recently, CEO Lisa Su's company has developed the MI300X processor to compete against NVIDIA's popular H100 processor. This has resulted in a multi-year partnership with Microsoft. So, Jim, up 70% since entering your bullpen 3 months ago, its recent 5-day 10% run-up, and today's pullback is now a good time to consider opening a position in AMD.
Well, you know, Dave, I got my meeting on Wednesday at 12. That's Jeff and I were going to do convene our conference, and I didn't do this right. I was too chary. I was too indecisive, and I let the stock get in ahead of me, and I feel terrible because Lisa Su was right the whole way. She got it right. I kept thinking there'd be a pullback, and there wasn't. I now feel that I have screwed it up, and I'm too late, and I'm not sure exactly what to do other than just own the fact, Dave, that I didn't do my job well. Let's go to Jeff in California, please. Jeff.
Hey, booyah, Jimmy Chill. Hey, Jimmy, you gave some great advice about 6 months ago to buy lots of Palo Alto and CrowdStrike. So I bought about 42,000 of each, and it's done nothing except go up and up and up, Jimmy. So thank you for that.
42,000. That's free. That's terrific. Thank you so much.
Yeah.
Man. That's great.
Oh, man. Love you, Jimmy.
Thank you.
Jimmy, I found out recently there's a stock statistically that everybody's been ignoring. God only knows why, because I don't, because this stock, I look at graphs, and this stock is in the top 5% of all stocks. It's called Arista Networks, and it's a cloud network solution company. I don't know what the heck that means, Jimmy.
Well, I'll tell you what it does mean. It means that they make a lot of money. No, Jay Shree is a fantastic executive. It's kind of a super Cisco right now. Jay Shree, you'll always welcome on the show. They've done so much great. They're a high multiple stock, but they make a lot of money, and they are an ideal cloud networking solution company that should be bought. All right? Now, the charts, as interpreted by Dan Fitzpatrick, suggest the semiconductor stocks have a lot more room to run. though it's worth noting that some of them, like NVIDIA, seem a lot more attractive at these levels than others. Much more made by today, including my exclusive with CrowdStrike. Microsoft was the latest high-profile player to face a major email hack. So do big firms need to up their security tactics? Maybe after hackers successfully targeted the biggest company in the world? I'm getting more color with CrowdStrike's CEO. He knows. And many analysts expect multiple rate cuts this year, including one of the group that still expects 5. But I got a different take based on what I'm seeing in the economy. I'm revealing what it is. And all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.